executives, analysts, and all of the guests joining us today. Hello, and welcome to the Thai Union Feedmill Analyst meeting for the second quarter of 2026. Today's meeting will cover our operational results as well as our business strategies and also open the opportunity for everyone to ask questions of our executives. Please allow me to introduce the executives joining us today. The first is Mr. Pirisak Budmichod, our CEO. And the second is Ms. Pianut Mlitananapan, our CFO. And I am Natyawadi from Investor Relations, and I will be your MC. Without further ado, I would like to hand things over to our executives to share our performance results for Thai Union Feedmill. Hello, everyone. Hello to the analysts joining us today. I would like to share the results of the first half of the year for Thai Union Feedmill. In the first half of 2026, TFM has been able to generate sales growth continuously despite the raw materials volatility, where we have faced increasing costs. Our sales have grown 2.7% from the year before, and we've been able to expand our customer base and maintain our current customer base. And our shrimp feed market share in Thailand has grown to 25%. At the same time, the company gives importance to cost management and expense management. We're very disciplined on that front. Our SG&A to sales has gone down to 8.6% from 9% the year before. We've also been able to effectively manage our receivables, and we have reduced our NPLs to 17.5 million baht. And this is a reflection of our strong credit risk management. Even though the fish meal costs have gone down, putting pressure on our profitability, we have been able to maintain our net profit margin at 11.1% thanks to our cost management, covering our expenses, and also our business risk management. Thanks to our solid financial status, the board of directors has passed a motion to issue an interim dividend of 0.18 baht per share. And this is a reflection of our determination to provide the best return to our shareholders, together with our investment for future growth, including our investment in manufacturing expansion in Ecuador. The Thai shrimp industry on this slide, you can see signs of recovery. The price of shrimp has improved after reaching the lowest point in the second quarter, despite the lower shrimp seeding compared to the year before. We are seeing improved shrimp farming in the second half of the year, and this is thanks to the improving shrimp prices and also the favorable seasonal influences. For TFM, we have been able to grow against the market tide, with shrimp feed sales increasing 13.4% thanks to our customer base expansion, including our new customers and our current customers. We are confident that TFM is in a position to benefit from this industry recovery in the third and fourth quarter. As for our dividends, TFM continues to give importance to generating the best return for our shareholders, and we have been able to maintain our dividend payout of higher than a minimum of 50%. And for the first half of 2026, the company announced a dividend of 0.18 baht per share, and this is a payout ratio equal to about 58%. This demonstrates our solid financial standing and also our ability to generate cash flow. Despite the market challenges, we maintain a balance between our investments for growth and also our efforts to provide attractive return to our shareholders for the long term. And I would like to hand things over to Bianud now. On this page, you can see in the first half of the year, as Mr. Pirasek informed you, we're growing by 12.7% in terms of revenue growth. The domestic sales have grown 6.3% year on year, and this is thanks to the shrimp feed and livestock feed. Our international sales went down 21.2% year on year, and this is due to a Indonesian market dropping. The gross profit margin has gone down from the year before to 18.8% from 22.4% the year before. This is because of fish meal, the upward trend in the cost, and these first 6 months compared to the first 6 months of last year, we're seeing an increase by 40%. Nonetheless, there is an offset from wheat flour and soybean, whose prices have gone down compared to last year, but the net impact is still putting pressure on our gross profit margin. And in Indonesia, the volume has gone down. And to develop the quality of our feed, we have reformulated to include more protein to make us more competitive in the markets that we operate in. Therefore, our production costs have gone up, and the Indonesian government has readjusted their policy with imports of soybean required to pass through state enterprises. So this has increased the raw material costs for our subsidiary in Indonesia. Our net profit margin is still at 11.1%, going down just slightly from 12% in the same period of last year. Why? Because of many areas. We have many initiatives, whether it's the SG&A cost management, which we've done quite well, whether it's recovering our receivables. We have an FX gain about 30 million baht, thanks to our forward hedging for raw materials from abroad. And the Thai baht has weakened, and this has led to benefit for us as well. And lastly, we also have the taxes that we have tax savings from BOI from the last year. Altogether, this has enabled us to have savings of about over 80 million baht, and this has helped to offset the impact of the fish meal costs, and our gross profit margin is still in a favorable range. The interest-bearing debt to equity is healthy at 0.08 times, and we are ready to continue our investment in Ecuador. On the next page, this is a look at our earnings per quarter. You can see from the first quarter to the second quarter, there's growth, a seasonal growth, in line with aquatic feed. If we look at it in more detail, you can see that the pattern for this year, we see growth from the first and second quarter is smaller than compared to 2025. The gap between the first and second quarter was about 20%. The gap for 2026 years for 2022 is 26%, and for this year, the quarter-on-quarter growth is at about 9.8%. And this is similar to what happened in 2024, and that gap was small in the first and second quarter. Why? Because, as Mr. Pirasek informed you, the prices of shrimp have gone down, and there are signs of a change in this, and this is a pattern that happened in 2024, where everything peaked in the third and fourth quarter, as you can see from the graph on this page. So we expect this year will be similar to what happened in that year. So in the second half of the year, we expect to see improved sales compared to the first half of the year. In terms of the proportion for our revenue by geography and segment, in Thailand, Thailand continues to contribute the greatest portion thanks to domestic sales, which are very strong. And in Indonesia, as we informed you, that the market has dropped a bit from many factors. There is a lowering in the shrimp farming, and there are also internal issues at our own subsidiary. We have ARs that are overdue, which has delayed sales to some clients who are facing liquidity issues. So our sales dropped a bit, and overall, in the bigger picture, the Indonesian rupee, the conversion rate has also affected our numbers. Will the industry continue to be like this in the future? This is July, so we may not see the numbers that you're seeing in our presentation today. The sales have gone up 40% already, so this is not reflected in the numbers we're showing you today, though. Things have gone up 40%, and this is due to our reformulation to increase the protein in our formula from April. It will take time for us to prove this, but we are receiving positive feedback, and we have been able to increase our sales. We have solutions for our customers who are overdue in terms of their accounts. We have a 3-party agreement, for instance, with a local party, and that's a cold storage in Indonesia. When they capture shrimp, we have them pay us directly, so that we reduce the risk of receiving the payment. And we're also cooperating with the banks to provide loans to our clients so that they have a better liquidity. We're also helping to look for co-investors to take over farmers, some certain client farmers of ours, and these are various solutions that we have put in place to help deal with our ARO that are overdue, and will also help improve our feed sales in the future. And these are the solutions we're putting in place in Indonesia. One other thing that has led to a drop in our international sales is our exit from our Pakistan subsidiary last year, and the net overall impact, there is no loss that is holding us back from this. And international sales also include our exports. In the second quarter, we saw increase by 60 or so percent because our trading partners in Sri Lanka have recovered from the flooding in the end of last year, and this has enabled them for them to improve in the first quarter. We also have been aggressive in looking for more partners abroad, and we are seeing the results gradually come into play, and we are starting to increase trade with these partners. We continue to push forward our international sales for exports, and our sales team is working with our academic team to export not just our products but also our services. And the overall view for you in the second quarter, if we take a look at last year, sales went down slightly, mostly due to the lower fish sales, and the shrimp and livestock feed sales continue to grow quarter on quarter. The growth is quite positive, but there's a delayed season because of the prices of shrimp, but we should see a recovery in the third and the fourth quarter. In terms of gross profit margin, it's gone down year on year and quarter on quarter, mostly due to the fish meal costs. And for SG&A to sales, we've been able to control these costs quite well. SG&A to sales is at about 8.4%. This is a very favorable number for us. And compared to the second quarter last year, it's a similar range. The net profit margin is at 11.1%, and it's due to all of the various things that I informed you of earlier, thanks to the BOI tax incentives, for instance. And on the next page, we can probably skip this page. Let's take a look at the details for each sector. This is for shrimp feed. Shrimp feed is still growing year on year and quarter on quarter. And as Mr. Parasak informed you, our domestic sales have grown in the opposite direction compared to the market. Thanks to our services and our formula, we've organized seminars for our clients, for instance. Our export sales have grown well, thanks to both our current customers and our new customers in newer markets as well. Our gross profit margin, or GPM, has gone down mostly due to the fish meal, increasing fish meal costs, despite the volume that has helped with our fixed costs. But the fish meal costs have led to a bigger impact. And for fish feed sales, it's gone down year on year, but it's gone up quarter on quarter, and this is a seasonal effect. What the decrease comes from sea bass feed because of intense competition, and this is mostly due to other freshwater fish. There are problems in other markets. In the previous analyst meetings, we talked about fresh fish feed that we're facing competition in, and farmers would change their strategies. Where there are issues with, for instance, gourmet fish facing an outbreak, and that fish feed the sales have not been very positive. Nonetheless, we do have many initiatives in place for gourmet fish. We have invited farmers in other areas who are not facing any disease outbreak for them to increase their gourmet fish farming. We're also moving forward in other markets where there are no issues, for instance, with frog farming and with other fish. Cobia fish, for instance, and if fish farming improves with the various fish that are facing issues right now, we expect our fish feed sales in those areas to improve as well. So again, we expect sales to improve. As for gross profit margin, that has gone down significantly, perhaps more than our shrimp feed. This is due to the fish meal ingredients, as it is a significant portion of the formula. As for livestock feed, you can see that there isn't much of an issue here. We are seeing growth both year on year and quarter on quarter. The margin is quite stable, but this is something that we are happy with, and we continue to be very disciplined in our management. And this is a demonstration of a slight drop in our performance, mostly because of raw materials. And for other areas, we have done quite well. We have savings in every other area. And this is about our cash flow. And it's a normal development. So we have dividend payments that are very pleasing. For our capex investment in the first and second quarter, we have not used much. We have not invested much yet. We will see more investment in the third and the fourth quarter. These are the ratios, the cash conversion ratios. AR days has gone down. This is a result of our collection for AR. Inventory days have increased because we have more fish meal on stock now. And this is to help maintain the costs. And so overall, there isn't that much to report on. As for the guidance that we'd like to provide for you, we have adjusted our guidance for 2026 to reflect our increasing raw materials costs, especially fish feed, which has gone up a bit. Nevertheless, we expect our sales to grow at 5 to 7%, and we will maintain our gross profit margin guidance at 17 to 19%, thanks to our product mix management, our cost control, and our production efficiency. And we will continue to move forward in our investment in Ecuador. We also have a policy of strict financial discipline, and we will continue to deliver positive and sustainable return to our investors. For the long term, our goal is to achieve more than 10 billion Thai baht within the year 2030, and this is through three strategies that we shared with you earlier. This is to strengthen ourselves in the Thai market. First, we're going to bolster our strength in Thailand. We're going to expedite our growth in Indonesia, and we're going to expand our business abroad. In Thailand, we will continue to strive to be leaders in aquatic feed, and we want to expand our products to newer products and newer markets. We will reformulate or develop our formulas for other fresh fish feed, and once the market becomes more active, and we also move forward with our R&D team. We have a goal to be one of the top three in the Indonesian market by the year 2030, and we are adjusting our HR plans to support this growth. As for abroad, our goals for the foreign markets, we have a goal to increase our proportion of sales abroad up to 50%. And this includes our expansion in Ecuador and also our exports to other markets. We have received halal certification for our fish feed and also our shrimp feed, and this will help us with our export of feed to other markets. We continue to have success with our strategies that are driving forward the quality of our products. We have consistent quality. We have strong relations with our farmers. We have strong relations with our trading partners. Let's talk about Ecuador now. We are in the last phase of establishing the company. Paperwork is taking a bit longer than we had expected, but we are working together on many different fronts. We are building a team. We are designing our facilities. We are working on land surveying and development. We are sourcing machinery. Avanti has joined us, and they're joining us in the design, and they have a strong experience in building production facilities in India. And next month, our engineering team and a financial team from Thailand will be joining a workshop in factory design in India. Everything is on track. We expect commercial operation in 2028, and once everything is fully operational in Ecuador, then our annual sales will be similar to what we're seeing here in Thailand. And this is why we are confident that we will be able to achieve our targets for the year 2030. Thai Union Feedmill would like to thank all of the analysts and guests who are joining us today for joining us for the analyst meeting. I hope that you will continue to support us and place your trust in us, and we look forward to seeing you in the future. Thank you.